Hello, folks, and the crypto new year has began with a bang. Yep, we are closer to 45,000 than we've ever been before. $44,900. I don't think we've been above 44.5 before. Did not have to wait until Wednesday. Sliced it today. Probably gonna get to $45,000 tonight. So happy New Year to most, but not everyone, because we also began with $225 million of liquidations. So that means people got wrecked to begin the new year. And of course, long traders got $135 million liquidated, while short traders only got $87 million. It looks like a lot of people were betting on 45,000 before the new year, and that did not happen. The biggest losers were the holders of TRB token, which held the positions on the digital asset, and that contributed more than 32% to the losses. Now, TRB was getting a lot of mentions before the new year, and I think people were making money on TRB before the new year, but it looks like in the end, they got pwned as well. And they were sharply falling, and TRB climbed to over 600 from 200 and fell to around $187 around the New Year time. So New Year was a year and time of pwnage for TRB holders. Hopefully you did not go along with leverage on TRB, or you would have gotten really owned, and New Year's did not begin well for you. So that's what we actually got kicking off the New Year's. Of course, this is all spurred on by the interest in the ETF, people. It's all about the ETF. Charles Gasparriano has actually said that a lot of the, a lot of the movement is going to come later in the week because it's going to take the SEC a while to get through the paperwork to approve an ETF. There are still non-believers believing that ETF will actually be denied. I think it's like a 90% chance of approval by the 10th, by the ways, which is next Wednesday. And it looks very, very good, folks. People are buying that up. Yes, there will probably be a little bit of the post-ETF sell-off, but I am not afraid of that at all. So New Year's brings new tidings. A lot of pwnage for some people, but overall, it's actually been very, very good. I don't think I've ever seen it above 44,500 anytime, and now we're finally at $44,900. So we're beginning with a rocketing bang, up 2,500 points from yesterday, up 5.38%, and most of the alts have actually followed as well. So we are higher than we have been for a very, very long time. And I think, like, even though most of the alts are up today, I think we'll see them really start to pop off tomorrow or Wednesday as it becomes closer. Now, some of the alts, I think some of you expect Caspa or others to keep on going up because of the pre-New Year pump. I think they've lost a little bit of steam, and it's time for others to come up, maybe some more of the traditional coins. But get that money ready for DeFi and other stuff, because that's going to happen too soon. And even if there is a post-ETF dump, it won't last for long, and we're going to be rocking in the new year. Unfortunately, that means Bitcoin is getting more centralized during this time. And according to this news, 5 Bitcoin mining pools dominated 80% of all blocks. Now you're saying, yes, the individual miners, they can actually switch pools, but that's fine. A lot of the mining is actually with the big players themselves anyways, and having too many of them dominate 84% of the blocks is not a good thing. So basically, in a span of this from December 30th, 2022 and December 20th, 2023, Bitcoin mining pools dominated 85 Bitcoin mining pools dominated 84% of all blocks. And a lot of BSV people are saying BSV can fix this. No, it doesn't, because it's also proof of work. And we know that Calvin Ayre will actually dominate that. So instead of 5, it'll kind of just be 1. So a total of 54,002 Bitcoin blocks were mined in the last year, with Foundry USA is emerging as the top contributor, mining an impressive 16,492 blocks. But of the top 5 combined, they mined 85% of them. And of course, this does actually have some people worried. As you can see, some people are saying humans are idiots. Because of centralization this causes, yes, collusion is an older trick in the book, now coming to blockchain, and mostly domiciled in the US. That's where the decentralization of some of these Bitcoiners, shaking my head. And one of those pools was already caught complying with OAFC. And 76% of the hash rate comes with 3 ASIC models made by the company. Now, the last one I'm actually not that concerned with. Just because they come from the same ASIC mining company doesn't mean they actually like share their hash rate to the same place. I mean, a lot of things are like manufactured by like 1 or 2 sources, but they're actually like more decentralized because different people are using them. But these guys are pooling their power into like a couple of pools. Ethereum, I think, has the same problem, but Bitcoin right now faces serious centralization and gathering of power. There's a lot of collusion and manipulation that can actually happen with Bitcoin, and there's really not much we can actually do about it. You know, like with proof of work, like it was always going to be the most efficient miners actually winning out, and the most efficient miners are those that can actually buy a large quantity of electricity on their own. That was never going to be individual miners. This whole thing of individual miners like trying to mine their individual blocks was never really going to happen, because the thing is, like, if you're an individual miner, actually making a block yourself is probably going, the chances are probably very low, and you probably just want to take average, like you just want to have like an average profit off your Bitcoin at this point. But unfortunately, like, you know, that's what happens with the centralization of mining. If you contribute to a pool, like every contributor in the pool basically just gets like X amount of dollars, however many hash rates. And I think most people would actually operate that way instead of basically saying like, hey, I want the blocks that I actually mine, because most of those blocks, the vast majority of them, are going to be empty. Well, not the blocks you mine, but most of the hashes you turn out will actually be empty. So it probably is a benefit to most miners, but of course it does lead to centralization in a few really large pools. And I do think that centralization is indeed going to continue. I don't think it's going to stop. So unfortunately, Bitcoin is becoming more and more decentralized. This is the problem with proof of work. It was always going to be this way, especially with a halving method, with like requiring more and more computing power to basically mine less and less Bitcoin, and there was really not much you could actually do about it. Vitalik has also revealed the Ethereum roadmap, and it looks like it's layer 2, layer 2, layer 2 all the way. Yeah, screw sharding, that's actually not going to happen. And of course, he laid out several steps, and you can kind of see where it is. And this is from Vitalik's Twitter. So by popular demand, an upgraded roadmap for 2024 and 2023. This is from December. This was from last year. Updated roadmap diagram. So essentially, you can see that we haven't really gone too much, because last year we already had the merge. And this time we're just kind of moving along right here. This is 2023, but like 2024, he updated it again. And essentially, he wants to do like a single slot finality thing. And that is the easiest to address a lot of Ethereum's problems. I'm not really sure if this addresses Ethereum's fees or slowness. So the role of single slot finality in post-merge POS improvement is solidifying. It's becoming clear that SSF is the easiest path to resolving a lot of the POS design's current weaknesses. As you can see, I think this line is kind of like these different lines. The solid line is kind of like where we are, the past, the future. We're about halfway, basically. And Ethereum's been up since, 2015? So we got about 9 more years before it gets all the way. And with Ethereum, we know there's a lot of delays. So you can be waiting another decade for all of this stuff to happen. You can see the goals here. The goals here, you have the merge goal to have an ideal, simple, robust, and decentralized proof-of-stake consensus. The decentralized part, not really happening right now. The surge goal, 100,000 transactions per second and beyond. So the surge is about 40% done. Merge is about 50% done. The scourge goal to mitigate centralization concerns in the Ethereum POS design, particularly around MEV and liquid staking pooling. That's about 40% done, as according to the graph. But I don't actually think it's 40% done. I think it's like 20% done, because Ethereum validating and the pools are very, very decentralized. The top couple of pools essentially hold all that power. The Verge is a little bit further along, and goal verifying blocks should be super easy. Download in bytes of data. So essentially, like, there's been a couple of updates with the Verge. So that might actually be coming, that might be finished sooner. The Purge, simplify the protocol, eliminate technical debt, and limit costs of participating in the network by clearing the history. Okay, so much. And the Splurge, everything else. But, a lot of this is around like some of the EIPs that are coming up. But a lot of the stuff is like some of the EIPs that are actually coming up. So more or less, I don't really know. I don't really trust Ethereum to like the EIPs to really solve anything in the coming year. We'll see at this time next year if Ethereum has done anything. My guess is basically no, and we're still going to be like flubbing around to see like what's actually going on. We'll have like the bull run in full swing probably by next winter, and hopefully Ethereum actually does something. Hopefully Ethereum actually does something to actually address some of the problems. I know Vitalik's problems might be different from our problems. His is like more network high level stuff, whereas ours is like, hey, you know what? The fees are too high. It's too slow. I'm not really sure if he can actually address that. Obviously, his scaling is all on layer 2, and I'm not really sure if that's going to work for everything. I know a lot of Ethereum fans are going to disagree with me on this, but you know, you've had several years, many, many years for Ethereum 2.0, and also to fix some of these problems with Ethereum 2.0, like, you know, speed and cost, and you really haven't done it yet. So you gotta like not mind me for doubting you so much. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.